Now, I can do one of two things. I can either start spending 100 hours a week trying to find what are the new and emerging opportunities, or I can find someone like Intelligent Investor who's got a track record of doing the work for me. Intelligent Investor's it's my turbocharger.
Hello, I'm Tony Kaye. I'm the editor of Eureka Report. Welcome to the Economic View. I'm joined as usual by Callam Pickering, our economics writer.
Great to be here.
Welcome, Callam. Callam, I thought we'd talk really about how Australia is tracking on an economic level. What are you seeing in terms of the forecasts and how we're tracking against those forecasts?
Well, it's been an interesting 12 months for the Australian economy. So leading up, we'd obviously had a very weak economy for a number of years, which is why the Reserve Bank cut interest rates down to 1.5%. The past 6 months, though, has actually been surprisingly strong, driven by much higher commodity prices, which has helped to boost national income growth and has fed into nominal GDP growth as well. It's one of the reasons why the federal budget, for example, is tracking a little bit better in 2016-17 than was expected 12 months ago, and even since MyEFO was released back in December.
We weren't expecting those commodity prices to tick up as much as they have, and that really put a lot back into the economy that the government wasn't expecting a year ago.
Yeah, that's right. The government was reasonable, they were a little bit optimistic when they put their budget together 12 months ago, but commodity prices have been much higher throughout most of the year than they anticipated. That's always a little bit of a goldmine for the federal government. It brings in a lot of money, helps boost the bottom line, which is precisely what we've seen. It's going to be interesting moving forward how they interpret what's going to happen with commodity prices over the next few years, because these assumptions are going to have a big impact on the bottom line.
Yeah, well, quite recently we've seen commodity prices drop because there was a strong buying activity from China in particular, and that's levelling off, if not declining. So the cash flow isn't going to keep going on as strongly as it has been.
Yeah, and it's come through at an unfortunate time for the federal government. I think they would have preferred if maybe commodity prices held up into the budget, so they could have maybe had a stronger assumption moving forward. So again, it's going to be quite interesting to see how they interpret that. Do they think commodity prices are going to ease further in the future? Are they just going to assume that prices remain as they are right now? Or are they perhaps a little bit more optimistic than some market analysts and perhaps believe that commodity prices are going to bounce back a little bit and provide a little bit more to the bottom line?
What does it mean in terms of the government's forecast for GDP growth? They were predicting it was going to tick up slightly a year ago. Has that happened?
Well, so GDP over the past 12 months has been moderate. It hasn't been particularly strong. Where the growth has been, though, is in nominal GDP, and that's because that was affected by the higher commodity prices. So that's been much stronger than expected, and that's one of the reasons why the budget balance has improved. Looking forward, it's anticipated that the budget will include higher expectations for GDP growth over the next 3 to 5 years, which is in line with some of the recent upgrades we've seen from both the IMF and the Reserve Bank of Australia. So they're a little bit more optimistic about the economic outlook from a real GDP perspective, and I suspect the same will be true from a nominal GDP perspective as well. So I think we're going to see a more optimistic forecast for tax revenue as well, and that's going to help support the budget and also drive us back towards surplus.
The other thing that they forecast a year ago was that mining investment was going to drop off pretty sharply, perhaps sort of taper off from the very sharp declines earlier on. Has that happened?
Well, there's certainly been a great deal of weakness in mining investment. I think it's actually been a fair bit weaker than the government predicted 12 months ago, and it's expected to continue over the next 12 months as well, based on the expectations released from the ABS most recently a couple of months back, suggests that mining investment over the next 12 months is going to be incredibly weak, sort of falling by another 20%, following on from falls of, say, 30% in the last couple of years. So this is an ongoing issue for the Australian economy, and one that it'll be interesting to see how the government interprets that over the next few years.
And what about things like inflation and jobs? Are we tracking pretty much on the predictions there?
Well, certainly based on what the Reserve Bank had to say last week in their statement on monetary policy, they seem to think that inflation is tracking roughly as expected. They're fairly optimistic about the employment situation. They believe that the unemployment rate is going to fall towards 5% over the next couple of years, down from around 5.9% currently. I think there's some debate over whether that's going to eventualise, and one of the reasons is because a lot of the growth that we've seen in the Australian economy over the past couple of years, and certainly moving forward, has been export-based in commodities such as iron ore and coal, and moving forward LNG as well. And these are sectors that haven't historically employed many people. So you might see a great deal of growth in exports of these commodities, but they're not going to drive employment growth. So it's possible that we could see stronger economic growth, but not necessarily the employment response that you would historically expect.
Yeah, and then we're hearing things, Amazon coming into Australia, really disrupting the retail sector, loss of jobs there. So there's quite a lot of moving parts really in the economy, as always.
Absolutely. Amazon's going to come in. They're going to be very aggressive. We know that. They do have a history of disrupting existing market places, and the retail sector has been somewhat subdued for a number of years. It hasn't necessarily been a strong sector outside of, say, Melbourne and Sydney. So if someone like an Amazon does come in and they're very aggressive, then they could certainly shake things up.
Now, Australia's dodged the recession bullet for 25 years or a bit over now. Do you think there's any sort of danger points there in terms of a recession?
It's very hard for Australia to have a recession right now, and one of the reasons is simply because our population growth is so high. When you have population growth of, say, 1.5%, then you need per capita GDP to actually decline by 1.5% just to get down to zero. And that's normally in a recession you might see a decline of, say, 0.5% in per capita GDP. That's what you'd see in somewhere like the US or the UK. And that's not going to be enough to push us into a recession, simply because our population growth greatly exceeds other advanced economies such as the US and the UK. So I don't see a recession in our near future, but I think there's certainly potential for this sort of weak economic growth that we've seen over the past 5 years to continue. So we could easily see growth in the 2 to 2.5% range persistently over a number of years.
And let's just wrap up here, but in terms of the government's forecasts on getting back into surplus, do you think they're on track there?
Well, I think they're certainly very optimistic about their ability to get us back to surplus. But I think what we have experienced over the past 6, 7, 8 years has been that the federal government tends to overpromise and under-deliver when it comes to the surplus. It's always just around the corner and it always gets delayed when the budget comes out. I think we still do have a bit of a revenue problem. I think it's going to be disguised a little bit in this budget because of the recent increase in commodity prices. But if commodity prices begin to decline further, then it is going to put another big hole in the budget. And I think we do need to address this in terms of tax reform rather than simply relying on commodity prices to fill in the gap.
Thanks very much, Callam. It's always good to have you on the show.
Yep, great to be here.
I'm Tony Kaye. I'm the editor of Eureka Report. Join us again next time for the Economic View.